I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the U.S. and China hit each other with new tariffs, both now taxing $16 billion worth of goods from one another's countries as trade talks continue in Washington. Plus, inside a Tesla teardown, UBS takes apart a Model 3 and says what's under the hood is disappointing. We'll bring you all the details. And Alibaba's sales growth outpaces Amazon as Jack Ma spends big to branch out into food delivery and services. But first, to our top story, trade talks between the U.S. and China have resumed, but that hasn't stopped the two nations from hitting each other with fresh tariffs. Both countries have started taxing $16 billion worth of imports from the other. China, meantime, says it will issue a complaint with the World Trade Organization against this second round of action from the United States. All of this at a time when low-level talks between Beijing and D.C. are underway. Despite that, Lynn Fisher-Fox, a former U.S. Commerce Department official, told Bloomberg the worst is yet to come.
I think we're headed full steam ahead for tariffs on the $200 billion worth of goods that are currently being considered. And so I guess it could escalate more, but at this point, I think we've reached we're at a pretty heightened level of trade tension at this stage.
I want to get straight to D.C., where Bloomberg's Sarah McGregor is standing by. She leads our U.S. economic policy coverage. So, Sarah, is Lynn correct in saying that the worst is yet to come?
I think that's the general agreement right now. Of course, we saw these $16 billion of tariffs and the retaliation by China today. So overall total now in trade, $100 billion of goods between the U.S. and China have been levied some duties on. But this $200 billion is really where things will start to get sticky. And I think that goods and a lot of goods that you'll see out there in the Silicon Valley are where will really hit consumers' pocketbooks, and that's the 200 sort of starts to nibble into those kind of goods. And so I think these trade talks that were in Washington today, that as far as we know, we're wrapping up just about now. It's about 5 o'clock in Washington. They're aimed at averting the $200 billion at a further escalation, but there isn't a lot of hope that they're going to get there.
Right, these are low-level talks. So what is the likelihood that will actually lead to any sort of progress?
So, of course, at this stage of the game and in basically a trade war situation, you're definitely going to need the highest level. You're going to need President Donald Trump to buy into any agreement. And I think at the low level, as Commerce Secretary Wilbur Ross said yesterday, it's better to engage than to not engage. But what we've heard is that the Chinese have really not brought anything new to the table. They've said, we're willing to buy more American goods, essentially, and try and reduce that trade deficit. And the U.S. is pretty stuck in its stance that it wants to see sweeping changes to China's economy. It wants it to end forced technology transfers, to end state subsidies, to bring their tariff levels down to the same that the U.S. charges. And China has not been willing to do that. It goes against the model that it's following and its plans to develop its own economy. And so you really see a standstill situation, and one that's hard to get out of.
And the question remains, Sarah, which country has the advantage? We spoke to an economist earlier who believes China has that advantage. Take a listen.
I think China's pretty well placed to just absorb this by throwing money at it. More fiscal stimulus, more currency weakness, more liquidity, just to keep things propped along. But it does still hurt all those goals that President Xi had put in place, the deleveraging, the getting rid of all the excess capacity. All that's gone on hold, if anything, gone backwards. So that's the real pain rather than a big hit to the GDP for China.
Sarah, what do you make of that assessment?
Well, I guess there's two sides to any coin, and the Trump administration would argue it's actually in a better position right now than China because, as we all know, the U.S. economy is ticking along. We saw more than 4% growth in the second quarter. Unemployment's pretty low. There's this bull run, this record bull run in the stock market. So the Trump administration believes it's in a better position than China, whose economy is weakening. The yuan is obviously also down a little bit. Stocks. And so, according to Donald Trump, this means that China has a little bit less room to run if there is a trade war. So I think there's a couple of ways to look at it. Obviously, for either side, it'll be how it hits the economy that could have the biggest effect. When consumers start to feel the pinch, that's really when I think they'll speak at the voting booth. And then politically, from China's point of view, obviously the president Xi Jinping holds pretty tight power there, so he's got a little bit less to lose than Donald Trump. We have the congressional midterms coming up and the election just 2 years away. And so I think there's a political calculation to be made as well.
Now, there have been so many lists of goods that could potentially be taxed. It's a little bit confusing, especially since some of this hasn't happened yet, may never happen. We just don't know. What are the tech products that Silicon Valley needs to be concerned about?
So in this first round of, essentially a total of $100 billion in both tariffs from the U.S. side and the retaliation, we don't see a lot of those kind of tech products being swept up, that there's a huge cry or concern. And even with the $200 billion list, which of course could still be revised, there's hearings this week in Washington, and there's all sorts of companies asking that items that they use be removed or that some items be added. It's still a work in progress. Again, we don't see like big ticket items like cell phones and laptops and TVs, a huge amount of those on these lists. But Donald Trump has kind of toyed with the idea that everything from China would be hit, $500 billion of imports last year, and he's flagged that as a number that he could target, which would mean everything. And of course, that would really start to hit the supply chains of companies like Apple, who have most of their production in China.
All right, Bloomberg, Sarah McGregor, I know you'll continue to follow these talks for us. Thank you so much for bringing us that update. Meantime, trade policy and tariffs are having a real-world and immediate impact on some of the biggest companies around the globe. Alibaba's vice chair, Joe Tsai, spoke about the trade dispute on the company's earnings call.
We believe that Chinese government policy will continue to support imports into China to satisfy the rising demand of Chinese consumers. This coming November, China will hold the world's largest import exhibition in Shanghai that will showcase products from all over the world. If U.S. goods become too expensive due to tariffs, Chinese consumers can shift to domestic producers or imports from other parts of the world.
Alibaba, of course, a Chinese-based tech giant. We're going to have an in-depth discussion about Alibaba's earnings later this hour. Coming up, while everyone is looking for answers on Tesla going private, UBS is out with a note on the quality of the Model 3, and the company is not impressed. We'll talk to the analyst who did a Model 3 teardown coming up. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
In San Francisco, a lot of tech action today.
Our top stories this morning in D.C. and
The Dow and the S&P.
Shall we? So the euro on a 7-day
sizable moves in the currency market, which is down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the first word Asia.
The U.S. and Japan duke it out over exchange.
China's slumping onshore bond market is
Airbnb has named Ann Mather, a former chief financial officer at Pixar Studios, as the first woman to its board. Mather, 58 years old, also serves on the boards of Alphabet and Netflix. The company, which investors value at $31 billion, had committed to diversifying the demographics of the board, which included its 3 male founders and 3 other men. Much more coming up of Bloomberg Technology after this quick break. We'll be right back. Elon Musk has taken another step toward Tesla going private. Bloomberg has learned that Musk has hired Morgan Stanley to assist him in a potential bid. Musk shocked the financial world earlier this month when he tweeted that he wanted to take the electric car maker private and had secured financing. Sticking with Tesla, UBS has some tough words for its Model 3. Analyst Colin Langan calls the sedan disappointing for a $49,000 car. In his latest note, UBS's teardown experts flagged quality issues, including missing bolts and misaligned spot welds. The bank says the Model 3 scored below average on a so-called fit and finish audit. Colin Langan is with us now. He's with UBS. UBS currently has a sell rating on Tesla with a $195 price target. Also with us, Bloomberg News Detroit Bureau Chief David Welch. So, Colin, I mean, the words sound pretty serious here. You say you found inconsistent gaps and flushes throughout the car, missing bolts, loose tolerance, uneven and misaligned spot welds. It sounds kind of alarming. Give us some more detail on what you found.
Yeah, sure. I mean, to be honest, we actually have a department called the UBS Evidence Lab. They actually went out and hired a team of engineers. So I'm not a professional engineer. I'm a finance guy. They're the ones who identified all these issues. They spent about 4 months actually looking through the car. Those were actually just a handful of issues with the vehicle. Obviously, it's very concerning. I mean, when we're talking about, you know, the fitness audit, that's a procedure they do for all the vehicles that they tear down, and that's their expertise. And this was larger gaps than you would expect. Particularly for a luxury vehicle. We'll see if the company is able to fix those, but you know, from the expert conversations that we had with other manufacturing people, it could clearly be challenging to get those gaps narrowed without doing, you know, more aesthetic fixes. To really get the underlying cause of the problem actually could take a long period of time, and that's why we remain very cautious on the stock. And you know, we thought that the teardown quality issues were a bit alarming.
UBS has called this borderline acceptable. David, how unusual is this for a luxury car that's already on the market?
In this day and age, it's pretty unusual. See, the big car companies can basically build a vehicle out of muscle memory. They engineer it and it rolls out. Sometimes you do have quality issues, and keep in mind we've had some pretty big gaffes, major recalls from General Motors, from Toyota in recent years. But generally, when they launch a car, you don't have big gaps. You don't have issues like this. There was another company, Monroe & Associates, that had torn a Model 3 down a few months ago, and they found a lot of the same things with the car that they bought. Welding points that weren't aligned, big gaps in the sheet metal. And here's the thing, this won't bother the first buyers, the true believers, the Tesla lovers who put $1,000 down. But once those people get their cars and Musk starts to try to sell into the general public, the luxury buyer, those people are going to be more discerning, and they can go buy other vehicles, especially in the next couple of years as the German luxury makers come out with more electric cars.
Now, Colin, your team has been talking to experts, former Tesla employees, for example, about how these could possibly be fixed, these issues. What are they telling you?
Yeah, I mean, what they've said is that aesthetically you could fix it with fillers. That actually doesn't really get to the root cause of the problem. So I'm guessing that the vehicles coming off the line probably are looking a bit better. I think our experts have kind of sort of spot checked that as well. But I mean, I think to get to the real underlying, the reason gaps are an issue is because of sort of the corrosion risk, the wear. It also speaks to the quality of manufacturing. To get to the core of the issue is quite complicated. It's possible Tesla was able to do that, but most of them think it's fairly unlikely in the short period of time they're able to really get to the true underlying cause of the problems.
Has Tesla or Elon Musk responded to you?
Not specifically to the report today, but they have talked about in the past that the initial models had quality issues, which is why we're proactive about talking to experts about how easy they are to address. They have said that the quality is on level with the S and X. I mean, I'm a bit skeptical given the nature of the issues we saw in our teardown vehicle.
Well, you never know when you're going to get a specific response from Elon Musk, especially on Twitter. David, put this into context of, the broader issues at play here. We're in the middle of him trying to take this company private. There are issues around production and production targets, which have become even more ambitious.
Yeah, this has been the biggest problem for Tesla, really. And if you sort of look at the big picture, Elon Musk is frustrated with being a public company, and he hates short sellers. He doesn't even like the retail seller who's in and out of the stock. He wants people who are in for the long game. But the entire reason he's had this frustration is because they haven't gotten manufacturing ironed out. And it's everything. It's the constant delays with getting up to 5,000 cars a week. It's pushing those targets out. And now, even with the cars that are being produced, you do have some of these, let's call them fit and finish issues, but they are things that luxury buyers will really zero in on. And it shows you that whether it's the rate of production or it's the actual quality of the build, they're just not there, and they don't have the expertise that the major car makers have.
Are there safety issues here, Colin?
There were a couple points that did raise some safety concerns, things about exiting the back seat if the 12-volt battery kicks out. I mean, nothing that was overly alarming, but there were some minor issues that they identified.
Now, UBS has a sell rating on Tesla. I mean, how has that changed since this controversy over going private, staying public broke out?
Our view hasn't changed. I mean, I think we're a bit cautious on the nature of the tweet, given that there's certain Reg FD rules. I think it's also going to be very challenging to go private, given they're going to need to probably raise, given the debt would probably come due. You'd have almost 80 to 90 billion that need to be funded to go private. So I do think there's going to be challenging doing a deal that size. So we think there's I think obviously the market doesn't seem to price in that the deal is going to get done because we're pretty far from the 420 going private target. So we're just as skeptical, I suppose, as the market.
All right, Colin Langan, UBS analyst, as well as our very own David Welch. Thank you both. Of course, we'll continue to follow every twist and turn of this Tesla story. Well, hacking, security, a client's privacy, and the difference between hate speech and free speech, all hot topics of discussion in 2018, and it doesn't seem to be going away anytime soon. These topics reach much farther than just Facebook's data breach, YouTube's decision to ban Alex Jones, or Twitter's findings of Russian bots. One company that can stress the importance of every discussion, GoDaddy. GoDaddy powers the world's largest cloud platform dedicated to independent ventures and has about 18 million customers and over 77 million domain names under management. Joining me now, Scott Wagner, GoDaddy CEO. Scott, thank you so much for joining us.
Thanks for having me.
So first of all, there was an error in one of Amazon's systems whereby sensitive documents from GoDaddy were in the Amazon cloud and available to the public for a certain period of time. What exactly happened here?
An Amazon employee loaded up some of GoDaddy's information about our own products, and for a brief period of time that information was exposed. Now, at no point in time was any individual customer information or any other sensitive PII information exposed to the public. It was more sensitive information between GoDaddy and Amazon. Amazon apologized and fixed the error, and we got on to business.
Does it concern you, as obviously you're responsible for a lot of customer data, and increasingly all of it is in the cloud?
Yes, absolutely. I mean, anybody who's doing anything in technology now should be concerned about it. The nice thing, and one of the things that we do for our customers, is protect their information, right? We help people get their ideas up online, present them to the world, and security is a big part of that, and it's something that we take really seriously.
GoDaddy made headlines a couple of years ago when you banned the Daily Stormer website, a white supremacist website. These are issues that are continuing to come back into focus, especially as Facebook and Twitter deal with, this whole issue of hate speech versus free speech. How has your thinking on that evolved, given the vast diversity of websites which you host?
Yeah, so first, we absolutely support the free and open internet, and absolutely believe in the free expression of ideas. Now, our terms of service and our policy is when content crosses the line between, frankly, something that might offend us into the line of directly promoting or inciting violence a particular group, we'll act. We've got pretty sophisticated teams and processes for looking at content, and when it crosses the line into directly threatening violence, we'll act, and that happens on very rare occasions, kind of like Daily Stormer.
So you're proactively looking for this kinds of content, not just waiting for law enforcement to flag it?
We will take flags from not only law enforcement, but from individual customers or people in the world, and then we turn it around, take a look, and decide.
So Alex Jones, for example, do you host any Alex Jones content? or InfoWars content?
We don't. Nothing on Alex Jones, nothing on InfoWars.
What do you think about, we've seen Apple, now Facebook, YouTube take a stand against Alex Jones, but at the same time, there is this concern about tech companies deciding what lives and dies on the internet.
So separate out a couple of companies and think about social media networks. So I won't even use specific names, but you have social media companies which their whole business is around publishing content for free and then monetizing it based on ads. That is a big, tricky issue that is deserved of all the time and attention that people spending around how that content is published, used, and then monetized. A company like GoDaddy, where we don't sell our customers information, nor do we syndicate it to the world. We provide software for our customers to use and protect their data. I feel like it's fortunate to be in that situation, and I think all the time and attention around privacy, around how information's being used, particularly for these broad platforms that are kind of monetizing free content, is warranted.
Senator Ron Wyden said earlier there should be consequences for platforms that don't remove people like Alex Jones. I mean, these are private companies. They certainly have the right legally to decide what stays and what goes. But do you think there should be consequences?
I think we need to think about the responsibilities of companies that publish and monetize content. So 2 Supreme Court decisions, right? The reference of falsely crying fire in a crowded room. That was a 1919 Supreme Court decision that said free speech is tolerated up to that point where you're actually directly in promoting violence. That was upheld in a decision in 1969, and that was actually the last time the Supreme Court has actually put parameters around free speech and content syndication. And I think given how important technology is in the world and social media networks in general, I think maybe that's going to be an issue coming up in front of the Supreme Court.
Perhaps we should revisit it since it's been a century. You were chuckling a little bit during the conversation about Tesla and Elon Musk. David Welch, our Detroit bureau chief, said Elon, was talking about how Elon doesn't like being a public company so much. You're a public company CEO. Do you think he's crying wolf a little bit here, or does he think he needs to grow up?
I think as a founder of a company, which God bless him, the electric car is an awesome invention that I certainly hope works. I think he goes back and forth between wanting everybody to believe and what it's like to be a public company, and so I can understand him wanting to be private in the moment when he gets frustrated. Personally for us at GoDaddy, the going public has helped us communicate what we do for people in the world. It's actually been a really nice thing. The more people that pay attention to us and realize what we do for people in the world, the better off we are.
All right. GoDaddy CEO Scott Wagner.
Emily, thanks for having me.
Thanks so much for stopping by.
Appreciate it.
Coming up, John Chambers spent decades guiding Cisco to new heights. Now he has turned to tech investing with an eye on the cloud company Rubrik. Our conversation with Chambers and Rubrik CEO Bipul Sinha next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. John Chambers spent over 2 decades at Cisco, and in that time, he helped take the company from $70 million to $47 billion. The Silicon Valley veteran is now Cisco's chair emeritus and still very active in the tech scene. Chambers has joined the board of one of his latest investments, the cloud company Rubrik. Rubrik's currently valued at $1.3 billion. Clients include the U.S. Departments of Defense and Energy, as well as Expedia and Cisco, among others. Here to tell us more, we have John Chambers, now CEO of JC2 Ventures, and Rubrik CEO Bipul Sinha. Thank you both.
Emily, it's a pleasure to be with you again.
John, you sat down and talked about how wonderful this new life of tech investing is.
Yes.
What is it about this company that you see could be so transformative?
Well, what's exciting is whatever I do with a replicatable innovation playbook, if you will, doing 180 acquisitions at Cisco as an example. So when I look at startups, I've been very fortunate to almost get my pick of the litter on a global basis. Not sure I deserve that, but the VCs and the CEOs have been very kind. So I look for a market transition that is both a business model change and a technology change. I look for a world-class CEO in the making making who wants to be coached, who's wicked smart. I look for customers who say, this is a company that you ought to invest in, and if you'd help them grow and scale, they could be a huge player in the industry. Then I look for the key industry analysts or VCs that I trust. What Rubrik has is all the above. It's right at the center of the cloud evolution and how you are just inundated with data, and yet the ability to get that from various public and private clouds in a secure way. Their customer list, I mean, when you talk to the customers, they gush over how exciting this company is and how valuable it is to them. And then the VCs, when you ask them about it, they say, John, this is my favorite play. So world-class CEO that I believe in one of the hottest areas, I'll make a prediction, this will be one of the hot stocks of this next decade.
So you think it's going to go public, not be an acquisition target?
I hope that it goes public, and we'll share with you why I think that. That's job creation, and I want to see more jobs created in this country.
So, Bipul, you're taking on companies like Dell EMC. These are very established incumbents. What do you think is the unmet opportunity here?
As businesses are grappling with the data and data growth around the world, and as the cloud is coming into the picture, everybody is looking at a single platform that can span from on-premises to the cloud. And Rubrik was born in the cloud era, and whereas all the other companies that we compete with were born before cloud, before virtualization. So we are uniquely positioned to take advantage of the cloud opportunity. In fact, our growth in some ways is indexed to the growth of the cloud.
You know what's exciting, Emily? You look at the numbers, 5 million, 50 million, 150 million, over 300 million this year, 250 people just 18 months ago, 1,200 today. It is a growth opportunity that's going to be really exciting. But what's hard for your readers to grasp is what makes this exciting to me. It's a platform for the future in data management. It is the next Cisco, if you will, potentially, or the next Dell, or the next SAP, or the next Oracle.
All right, well, that's a very high recommendation. Bipul, one of your services targets ransomware, which is the process by which hackers take control of a company's data, then hold it for ransom. Yep. Essentially, it's been a very difficult problem for the industry to solve. We've seen some high-profile ransomware attacks in Atlanta, the NotPetya attack, which actually crippled computers around the world. Is it getting harder to stop this, or easier because now they're becoming more high-profile and hackers are seeing the impact?
Hackers are always finding newer ways to attack, so it's a little bit of a cat and mouse game. We looked at this problem at Rubrik at the architecture level and said that can we build a platform that is immune to current attacks and future attacks, and that's what Rubrik does. We uniquely built a platform that is an immutable data management system where hackers cannot get to, and we are helping like hospitals and law firms and very large global businesses around the world to not only detect ransomware through our radar platform as SaaS, but also to mitigate the ransomware problems through instant recovery across all of their applications.
Meantime, we're hearing new information from Facebook and Twitter about attempts to meddle in the U.S. election. We're in the middle now, John, of a trade war, having run one of the biggest enterprise companies in the world for 2 decades. What are your biggest concerns about the sort of state of the U.S. economy?
Well, first, on the U.S. economy, it's stronger than most people realize. When you talk to citizens out there, their paychecks are going up. They know they've got a good job or they can find another good job. The enterprise CEOs are probably as bullish on the economy as I've seen them in a decade.
Is a trade war a good approach?
Well, no. Trade war is an undesirable outcome. But I do think we had to get a fair trading position with our global peers. And I think for many years, China was a great win-win partner. I think over the last decade that has developed into win-lose. We have to correct that. But it's in China's best interest and the U.S. best interest to solve that. But what's exciting is you look at what's going on in countries like India that are growing GDP at 7 to 10%, and the relationship's never been stronger. You look what's going on in Europe. So I think we'll work through these challenges. And unfortunately, Emily, I think this is more the new status quo. There are always going to be bumps and uncertainties. They're going to occur at a faster and faster pace. World-class countries or world-class companies will steer the way through that.
There are some pretty big potential bumps in the future. In fact, President Trump said today that he thinks the stock market would crash if he is impeached. It's hard to believe that we're even talking about this, but we are. I mean, do you think there's any truth to that, the impeachment of a president, or even that kind of statement? Is it scary when a president says such a thing?
Well, one of the fun things about the job I do is I coach the young CEOs how to handle difficult questions. So, people, that is yours. Let me take it. The answer is the market does not like uncertainty. And I think what you've seen is with the strong economy and finally getting GDP growth back above 4% and full employment and people getting raises, it gets nervous when there is uncertainty. But I do think that is the new norm. And our country's always been able to navigate through that. And I think we're making changes on tax law that needed to be done. We're finally getting the average American to really have a raise, which we haven't done before. My worry is actually something different. I think our nation is losing its innovation image. We used to be #1 in innovation. We didn't even make Bloomberg's top 10 innovation countries. We used to, during the mid-90s, when you were generating 22.5 million jobs in 8 years, we took 700 plus companies public per year. Now we're barely going to get over 200 this year. Startups are almost at a 20-year low. So I think we need to become the innovation country again and the startup engine again. That's actually what I lose sleep over. And it's why I want to see both role models, but also our country get back to being the very best in the world in startups and job creation.
Bipul, what about this meddling in the election? I mean, Facebook now saying it's not just Russia, but Iran that's doing this. And who knows, potentially China, North Korea, potentially the U.S. is doing this to other countries. I mean, just how vulnerable is our democracy?
If you look at businesses fundamentally depend upon data and application. And as individuals, we are using data and application in our everyday life, and that creates all sort of vulnerabilities. So as a country, as a global economy, we need to focus on how do we secure our data and how do we allow people, businesses and individuals to get back to the right state of their applications and data. If you look at Rubrik, that is our goal. We are helping businesses around the world to secure their data, create compliance governance on the data, and allow right people to have the right access. These problems will only increase as the digitization increase, and we have to grapple with it as a global economy.
We've been talking a lot about Elon Musk, and John, you know the pressures of running a public company. Do you have sympathy for Elon Musk, or do you think he needs to buck up?
I think every CEO goes through a period of challenges and opportunities. And Jack Welch many years taught me, I thought I had a great company in the late 90s, and he said, John, you have a good company, not a great one. And I said, what does it take to have a great company? And he said, a near-death experience. At the time, I didn't get it, but it is absolutely true. For a CEO to lead, or for a company to be a great company, you have to not only do well during the good times, but you have to handle the times when you get knocked on your backside. And it hurts. And you have to search how much of it was self-inflicted, how much of it is market, get your strategy right, and then come really back. But you've got to deal with the issues and be candid about what is internally creative versus others. It's part of the CEO role today. You've got to be able to handle the good times and the challenges and be able to communicate what you're going to do during the challenging times.
He doesn't seem to be able to handle that, though.
I think he'll make that. He's a smart man. It's like anybody else. You go through the bumps and they surprise you, and all of a sudden, I've been there. You know, top CEO in America, et cetera, could not do anything wrong, and all of a sudden people question, should I be able to lead my company? Jack Welch called me up at the end of 2001, and he said, John, you know I have a great company. I said, Jack, it doesn't feel like it. My stock's down, my shareholders have lack of confidence, the employees are questioning. He said, until you go through that as a leader in a company, you will never have a great company. He was right. It's much like our kids. Our kids, until they go through their challenges, as a parent, we just want them to get through that. Now, the fun thing about coaching is I get to help people go through this in a way that perhaps I didn't have mentors or coaches who did that on an across-the-board basis.
So what other tech trends are you so excited about? I know, you've invested in drones. You invested in all kinds of other enterprise technology.
It's all about getting the market transitions right. So the Internet of Things is huge. So we do drones, connectivity. It's all about security, to your other point, probably 5 investments in security. It's about open, transparent government, which you just hit on. It is about how social media, with a company like Sprinkler, mines data across 26 social media platforms. It literally is about ag tech with crickets, and I should have brought some crickets for you to eat today in terms of the direction. And now it's about cloud, data management, et cetera. So I try to pick what are the key market transitions going on that are enabled business models and technology, and I have been fortunate enough to pick some young CEOs who I really believe in their future.
All right. John Chambers, JC2 Ventures CEO, longtime former CEO of Cisco, and Bipul Sinha, CEO of Rubrik. Thank you both for stopping by.
Thank
Appreciate
you.
it.
Thank you, Emily.
All right, now on the topic of election interference, Google has deleted 39 YouTube channels and 19 other web pages connected to Iran's state-run media outlet, citing attempted state-sponsored hacking and influence campaigns. Google revealed manipulation efforts began as early as January of last year. Coming up, Alibaba's first quarter earnings beat analyst expectations, but as the company continues to expand beyond e-commerce, can it continue to dominate its core business? This is Bloomberg. Online ticketing and event site Eventbrite is filing to go public. The company filed for its U.S. IPO, listing the offering at $200 million. The company plans to use the proceeds to repay debt and raise working capital. I spoke to Eventbrite's co-founder, Kevin Hartz, on Bloomberg Studio 1.0 back in March, where we talked about the advantages of going public. Take a listen.
It used to be, I think it was John Doerr that said that after 6 quarters of revenue growth, that it was time to go public. That was like the sentiment of tech in the 90s, that you would be out really quickly. And now we've kind of swung the other direction, where companies are just staying private for a very long time. And that can have a detrimental effect, because you don't have the kind of light, the sunshine of the public markets to shine in and kind of breed more accountability, and a lot of bad things can happen. So I see personally a lot of benefits to going public, and you know, the company's ready when Julia's ready to make that call.
Julia Hartz, of course, is the CEO of Eventbrite. Julia and Kevin Hartz, the co-founders and also husband and wife. Well, while recent earnings proved disappointing for tech giants like Tencent, Facebook, and Twitter, Alibaba managed to turn the tide. The Chinese e-commerce company reported first quarter results Thursday that beat expectations, with revenue rising 61% to $11.8 billion. Alibaba grew at its fastest pace in 4 years, with expansions into cloud computing, retail, food delivery, and video streaming. Here to tell us more, Bloomberg's Selena Wang. So what was it that helped boost Alibaba's results?
So this definitely set aside some investor concerns that Alibaba is being hit by some of these macro issues, like the slowing Chinese economy, as well as these escalating trade tensions. Now, this massive revenue growth was largely driven by new businesses like cloud computing, local services, entertainment. So if you really peel back and look at the bigger picture, some of their core competencies were slowing down. For instance, customer management revenue is what they charge for marketing fees to their retailers. That actually slowed down quite a bit. And also, if you strip out the consolidation of Ele.me, which is their food delivery business, and Cainiao, the logistics business, revenue growth was actually only 49%. That's still significant, but it's the slowest in 2 years. So yes, this was a great earnings announcement, but the question is, how far and how deep will the margin pressure be as they invest in new businesses?
Where has Alibaba been investing outside this core business? I mean, tell us a little more about the food and food delivery.
Right, they really want to build this moat beyond e-commerce. They want to get into as many touch points of the average Chinese consumer's life as possible. So that means entertainment. They have digital streaming through Youku. They've been investing heavily in content there. In food delivery services, that is a hugely expensive battle that they're fighting. And they also recently announced that they're merging Ele.me and Kobe, their local services unit, and pouring $3 billion of capital into that with SoftBank. And the bet here is that by injecting more cash into it, it can better compete with Tencent's Meituan Dianping. So these are just a few of the areas. On top of that, there's also cloud computing. So there's a huge moat that Alibaba is trying to build. And it's great that they're trying to increase their addressable market, but it's also very expensive, and many of these areas are not profitable.
Now, I do have this chart in my GTV library showing how Alibaba's top line growth actually exceeds Amazon when you're looking at revenue growth year over year. I mean, in so many ways, these are very different companies, but they're often compared, and in many ways, they are similar. You know, what can we take away from the fact that, in fact, Alibaba's revenue growth is pretty impressive when you look at one of the most valuable companies in the world and based in the United States?
Well, Alibaba has been described as not just the Amazon of China. It's also the Facebook of China. It has elements of YouTube, has elements of Netflix, and so many other services. So they have such a gigantic ecosystem that enables them to drive this revenue. They also have the added advantage of not having a ton of physical infrastructure that they have to deal with, which Amazon does, which is a big drag on their profit margins. But the bigger question is, as Alibaba invests in more offline, in more logistics, retail, and these lower margin services, how is that going to impact their future financial picture?
All right, Bloomberg's Selena Wang, thank you so much for giving us that update. Coming up, the secretive electric car company planning to change the future of transportation. We'll talk to the company's founder next. This is Bloomberg. Electric adventure car startup Rivian has been in stealth mode as it raised nearly $500 million in funding and taken over a shuttered Mitsubishi plant in Illinois. The company plans to unveil two highly anticipated adventure vehicles, a pickup and an SUV at the LA Auto Show this November, and will begin rolling out their adventure SUVs in 2020. Eventually, Rivian says they will eventually offer the vehicles built with over 400-mile range as a part of the sharing economy. Here to discuss, Rivian's founder and CEO, RJ Scaringe. So you haven't released any photos of the car. We saw some blurry photos in that B-roll
very little information.
Released. So we're going to have to take your word for it. But what is it that makes your electric vehicles so special?
So when you think about electric vehicles on our market today, and for that matter, vehicles in general, you generally have to pick between fuel economy, performance, capability, utility. And what we're doing is we're bringing all those different functions together. So this is a vehicle you can put your pets, your kids, your gear into. It's still fun to drive, and of course, still very efficient.
400-mile range per charge is actually pretty good. It's better than all Tesla models.
Yep.
So do you think that could quell range anxiety, which is still very real?
For sure, and a big part of our brand is going places. So going to skiing for the weekend, going to the lake with the family, going to the cabin. So the vehicle has to have the ability to drive these long distances.
Talk to me about cost, target demo, some of the other specs that people in this market would be really concerned about.
So when we think about the vehicle, you've got, as you said, you've got range, you've got performance, you have capability, you have utility. And for us, as a new player, we really have to make sure we're providing something that's unique in the marketplace. So, of course, the range, as you said, will be significant, but also the performance will be very exciting. So these are vehicles that will do 0 to 60 miles per hour acceleration quite quickly. They'll be very capable both on-road and off-road. And they'll have a ton of utility. So they'll have utility that you'd normally find in less exciting vehicles, let's say a minivan or a pickup truck, but combining it to something that's really fun, really exciting.
So who's the main competition? Is it Tesla?
So when we think about Tesla, they've done an exceptional job at really making electric cars cool and getting people to see electric cars in a different light. What we're focused on is a very different type of product in a different segment. And today, there really aren't anything else out there that's addressing this point.
So we've done a lot of stories on these hot electric car startups, some that have come and gone, burned brightly, disappeared. Faraday Future almost died. Now it's maybe coming back. There's another company, Lucid Motors, NIO. What makes it so hard to succeed here?
So it's a business that requires a tremendous amount of capital. It's very complex in terms of the number of skill sets you're putting together. So you've got technical skill sets, you have manufacturing skill sets, you have the overall engineering skill sets. So what we've done in terms of delivering to that is we've put a lot of focus on making sure we have the right engineering and manufacturing capability and combining that with a very strong technology component. So we have teams on the West Coast and we have teams in Midwest, and bringing those two worlds together.
You also have a B2B play. Tell me about that.
So underpinning all of our vehicles is what we call a skateboard. We call it a skateboard because it sort of looks like a skateboard, but it houses the battery pack, the drive system, the cooling system, all the propulsion systems, what we think of as our digital architecture. And that system, while it sits under our vehicles and provides, as we said, lots of performance, lots of range, lots of capability, that same architecture can sit under other vehicles. And the batteries that sit at the core of it, and specifically the battery technology, has applications well outside of our own vehicles.
So you could sell this to any car maker that's not an electric car maker, and they could electrify their cars?
So what we're finding is a tremendous amount of interest from some very large global players.
Like who?
Unfortunately, we're not able to say right now. But from very large global players to take this platform and use it within their portfolio, and of course adjusted to the performance requirements of their application. But we're also finding, from an electrification point of view, the battery system has applications well beyond even vehicles.
And tell me about your plan to offer a subscription model.
Sure. So today, when we think about buying vehicles, or when you think about mobility, you really accomplish that through purchasing an asset, purchasing a vehicle. And what we see happening over the coming years is the ability to start to think about consuming in a different way. And the ability to think of Rivian as your partner for adventure. So you may not own it, but it can take you for your weekend adventure. It can take you on your trip out once a month, once a year, once a week, depending on your application.
So I understand you've been obsessed with cars from a very young age. It's interesting because I know some other folks in the electric car industry who talk about just how hard it is to find talent here because it's such a specialized skill, and yet there are so many companies now competing in this market. How would you describe the labor market to build electric cars?
It's of course competitive, and the way we've structured ourselves, we have about 450 people at the company, and with the manufacturing and supply chain team and the engineering team, large for vehicle engineering, largely based in Michigan, we're finding that a lot of that really experienced talent is excited about doing something different, and excited about being in a different type of company, different type of vehicle. And then the technical side, a lot of what we're doing around the battery system, our connectivity platform, because the technical challenges are exciting and interesting, we're able to pull in some great talents. We have people from some of your large technology companies like your Googles and your Apples. We also have people come from traditional automotive companies, and really interesting mix of talent.
All right, Rivian founder and CEO RJ Scaringe. I guess we'll be watching at the LA Auto Show to see the final unveiling. Thank you so much for stopping by. That does it for this edition of Bloomberg Technology. On tomorrow's show, we're going to speak with the CEO of Autodesk. That's all for now. I'm Emily Chang from San Francisco. This is Bloomberg.